Good morning. My name is Martin Kenney. I live in the British Virgin Islands. I'm a fraud and asset recovery lawyer, and I represent victims of fraud of all shapes and sizes, including individuals, large groups of people, financial institutions, and sometimes governments in kleptocracy-type cases. In all of these kinds of cases, we have a fundamental problem we face involving risk at the beginning of each case or job. And that is because usually clients who've been victimized or affected by fraud or breach of fiduciary duty or some other form of corruption have either A, had all their money taken from them, so they have no access, natural access to justice, because without money you can't hire professionals like us sensibly to recover value or to conduct an investigation for assets, or they become psychologically disabled. They don't want to throw good money after bad, as a proverbial statement, which is a code for I don't want to embarrass myself further. I'm upset enough by fraud. It's all upsetting. I don't want to go further in terms of risk. What can you do to help me without costing me money is a frequent call from victims. So the only solution that we have is either to raise money through so-called lawyer-financed litigation, the classic contingency fee model, or go to the market to try and raise some money from investors to create a venture between victims and people who have savings who would like to co-invest with victims in terms of the risk associated with the process of recovering assets. So we're going to talk about, today's subject is funding of the pursuit of asset recovery claims and investigations using various different techniques that are available to victims now in the market. We have a very distinguished panel to deliver remarks in this area. First, we have from Canada to my left, your right, Jonathan Cooperman, who's a partner of Farber Financial Group in Toronto. Jonathan specializes in fraud investigations, forensic accounting, and asset recovery, particularly in areas of bankruptcy and insolvency, and large groups of victims and Ponzi scheme type cases. And you'll hear from Jonathan's Canadian insight in this area and the experience he's had to try and organize funding for victims. Then to my right, your left, is Tim Scrantom. Tim is a principal of Scrantom Dulles International in Washington, D.C. Tim is both an American lawyer and an English barrister. He's also an entrepreneur in the area of litigation funding. Tim having co-founded both Black Robe Capital Partners and Juridica, which is a well-known 6-year-old alternative investment market, London Stock Exchange listed litigation fund. So we'll start with Tim, and Tim's initial mission for 15 minutes with some piping in and the odd interruption from Jonathan and myself will be to lay out the basic principles of the history of litigation funding, the core principles, the framework for analysis, the foundation to the discussion. Tim.
Thank you. Pleasure to be here. So the topic, as you see, is not just litigation funding, third-party funding. We will weave into this topic also discussions of other kinds of contingent fee, conditional fee, damages-based agreement financing. But I think because those are fairly familiar to most, probably the core part of the presentation will focus on outside capital. We'd like to think that when you leave here, you'll have an understanding of how it works, what outside capital is looking for when it entertains investing in some kind of a claim, a case, an asset recovery project. We'll probably start a little general because it's a relatively new world, and go through some of the basic elements with the hope, though, that there will be some valuable takeaway information in terms of whether what you are doing or proposing to do could be attractive to some kind of outside capital. And I think it's useful, too, in that regard to point out that don't think of this just as the litigation funding world, just as the so-called litigation funders who have appeared in the last 6 or 7 years, but rather broader capital markets, whether they're hedge funds, family offices, or other people that could be motivated for some economic reason to become involved in a claim, a case, or a project.
Just as Tim goes on, as a panel we discussed yesterday, we would welcome and entertain questions throughout our discussion rather than making this just us talking to you and waiting to the end for questions. Please feel free to raise your hand. I'm sure there's a remote mic somewhere around, and we can have a dialogue throughout the discussion.
Yeah, absolutely. I mean, it's an intimate group, so feel free, and I'll ask my colleagues to catch the hands